right, hello everyone. How you doing? Happy weekend. Welcome to the first ever Be Empire weekly crypto lesson trading class. Okay, so today we are going to be looking at the topic multi-time frame analysis. All right, multi-time frame analysis. So some of us that are already acquainted with what crypto trading is all about, we're already practicing trades, this and that, we're already familiar with this particular term, while some of us are still new to this particular term. That's for our beginner traders. Okay, so I'm going to explain what the concept is all about and try to make I'm going to make this video very short, but trying to give you as much key and vital information as possible. So when we talk about multi-time frame analysis, all right, we refer to doing technical analysis on multiple time frames. As the name implies, multi-time frame analysis, it just simply means doing your technical analysis on multiple time frames, on more than one time frame. Okay, now we may now ask, what's the reason for this multiple time frame analysis? The reason for it is to get the general trend, the general direction and structure of the market, and it enables us place better trades to gain profit. One of the very big advantages of doing multi-time frame analysis in your technical analysis trades, applying it in your technical analysis trades, is that it helps you to minimize your risk and maximize your profit, because that's what crypto is all about. All right, we all know crypto is a very risky business, but you can still earn a lot from crypto. And how do you earn a lot from crypto? You earn a lot from crypto from implementing little strategies here and there that could drastically minimize your risk and maximize your profit making. All right, so back to what I was saying about multi-time frame analysis. It's just simply doing your analysis on multiple time frames. All right, now we have several time frames, like probably up to 15-20 time frames available to us on our different trading apps. I'm currently using the Binance app, available to us on our different crypto trading apps. All right, so when we talk about this multi-time frame analysis, we okay, sorry for the interruption. When we talk about multi-time frame analysis, like I was saying, involves you doing technical analysis on multiple time frames. All right, based on your analysis of multiple time frames, and we have several time frames here, as we can see above our screen here. Okay, so like I said, the app that I'm using is Binance. All right, and this is currently the mobile app. You can also trade with your the desktop app, that's the website, or any other crypto trading app that you are comfortable with using. So since we have a lot of time frames, how do we then know which of the time frames to do this analysis on? Because the truth of the matter is, you don't need all time frames. Though it's multi-time frame analysis, but the truth of the matter is you don't need to do the analysis on every single time frame you have on your crypto trading app. No, as a matter of fact, you just need just three of it is fine. Three time frames are fine. Okay, but you have to be strategic and intentional when picking these three time frames. Okay, and how do we go about picking three time frames for our analysis when we have several time frames to choose from? All right, we do this by, first of all, answering two questions. First of all, we answer the question of the duration of time you want to spend on that trade. How long do you want to spend on this particular crypto trade? Are you interested in spending a few minutes, a few hours, a few days? Do you intend to spend longer on the trade, or a shorter period of time on the trade, or a moderate amount of time on the trade? Next up, you have to answer the question of what type of trader you are. Are you a trader that is patient enough and likes to build with the market, invest slowly and then cash out in the long run? Or you just want in and out of the market, you don't have the type of patience you need to invest slowly with the market? Okay, when you answer these questions, then you will be able to pick the three time frames that you'll be working with. Okay, so now we're going to classify ourselves I'm going to help you kind of like classify yourself and know which type of trader you are. Now, if you're a trader that likes to build with the market, you have more patience in you. You like to be patient with the market, invest slowly at support levels, buy a coin, and then sell off in the long run. Okay, then you would be classified under the long-term traders or the swing traders. Okay, these are people that like to build slowly with the market, like to take their time, and they are not looking to cash out immediately. They are looking for a long-term profit, which in most cases could be very huge profit taking. Okay, now if you're a trader that's you don't like to spend too little or too much time on your trades, you just prefer to spend a couple of hours to a day on your trade, then you'll be classified under the intermediate trader. All right, but if you're a trader that doesn't have any patience for trading, which I do not recommend, but patience is a very vital tool for a trader. But if you're someone that you're still working on your patience and you just want in and out of the market, you want your profit to be gotten in a matter of minutes, seconds, etc. You don't spend no more than a few minutes in the trade, then you'll be considered under the scalp traders. Okay, the scalp traders. Now we have classified these traders into three categories. Let's go ahead and classify mention these three time frames. Like I said, we just need three time frames, the three time frames that we'll be needing for multi-time frame analysis. So first of all, we have our first time frame, which is what the directional time frame. We're going to call that the directional time frame. Okay, now this directional time frame, as we see over here, this directional time frame, okay, it's the longest time frame. It's the longest time frame. Then next we have our structural time frame. It's the medium time frame, and finally we have our entry time frame. So we have directional time frame, structural time frame, and finally our entry time frame. Some traders could decide to go further and have a precision time frame. That's the fourth time frame, a precision time frame, to kind of give you like more clarity on what your trades are going to be like. But we're going to just focus on three for now. Okay, so when we have our directional time frame, our structural time frame, and finally our entry time frame. Now what are these time frames and what do they signify? Our directional time frame, like I said, it's the largest time frame that you'll be using for your multi-time frame analysis. Okay, and this time frame, as the name is, it tells you the direction of the market. This is the time frame that you would use to know if you are going to be entering bullish trends or if you're going to be entering a bearish trend, or a bullish trade or a bearish trade. Okay, you would use this time frame to know if you're going to place your trades in an upward direction, which is buy or long, or in a downward direction, sell or short. All right, next up we have the structural time frame. It's the moderate time frame. All right, in between the other two time frames. This, as the name is, gives you structure in your trade. By structure, I mean this is the time frame that would enable you confine your trades. I don't know if that makes sense. It enables you kind of like give structure to your trades. By this I mean, by the time you draw out your layout or your structure on your structural time frame, you would be able to know, okay, if the price of this coin goes above this structure or below this structure, I need to exit this trade. I don't want to trade outside this zone or outside this structure I have plotted on this time frame. All right, now finally we have the entry time frame, which is the least time frame, the lowest time frame. This time frame enables us to have entry and exit point. This is where we get our exact entry and our exact exit point for our trade. Okay, the reason is because these time frames are closer to our set goals of how long we want to stay in the market. Okay, so one important thing to note is, please start your multi-time frame analysis in descending order. By descending order, I mean from highest time frame to lowest time frame. From highest time frame to lowest time frame. Why are we doing this? Now, many traders make go ahead to do their multi-time frame analysis from in ascending order, from lower time frames to higher time frames. I'm not saying this is wrong, but from experience, I will tell you that it's not really safe to do so. The reason is because where the time you start from the in ascending order from the lower time frames, you're kind of restricting your view on the market. You're restricting your structure, your view, your opinion on the market. Just imagine looking down on the earth from the solar system. Okay, we first of all look at the solar system, then we go down to the planets, then we go down to the earth. Okay, then from the earth we go down to probably a particular continent, from a continent to a country, from a country to a house. You see, you kind of like already have like a bigger view. You know what to kind of expect, all right, in the whole view of things that you're trying to lay out. But then going ahead to go from smaller to bigger when it comes to trading, you kind of restrict your movements. You don't know what is going to happen. What if your trade doesn't go as planned? What if what you're expecting to happen, the direction you're expecting the market to take, delays for a period of time, for a longer time than you expected? Okay, so this is why we want to start in decreasing order. That's from the largest time frame to the smallest time frame. In this case, as we've classified our time frames, we want to start our analysis from our directional time frame down to our structural time frame, and finally our entry time frame. So let's kind of have a little view of things, and how things are going, how we kind of apply this. Like I said, I want this to kind of be like a short video. I don't want it too lengthy. Okay, so let's pick that we're scalp traders. Okay, and we're looking to enter a scalp trade. So like I said earlier, as a scalp trader, as a scalp trader, our as a scalp trader, our basic need or our basic aim is to be in and out of the market. All right, in and out of the market. So before I go into kind of like showing you the practical aspects, okay, kind of like showing you the practical aspect, I would like to give you like a little guideline on which time frames to use based on what type of trader you are. So like we classified ourselves as long-term traders, intermediate traders, and finally scalp traders. Okay, and then we have our time frames as directional, structural, and finally the entry the entry time frame or the entry chart. Okay, now as a long-term trader, your directional time frame, you could either use the monthly time frame as your directional time frame. Okay, the monthly time frame, as a long-term trader, the monthly time frame would work well for you as your directional time frame, because now you're looking to invest for a longer period of time. For your structural time frame, the 1 week time frame would do the trick for you, and finally for your entry time frame, the same 1 week time frame can do the trick for you, or the 1 day time frame. Really depends on you as a trader. Okay, now next, if you're an intermediate trader, that's you just want to spend a couple of hours to a day on a trade. If you're an intermediate trader, your structural trade, your directional time frame or your directional chart could be the 1 week time frame. The 1 week time frame is a good time frame to use for your directional time frame as an intermediate trader. All right, then for your structural time frame, the 1 day time frame, that's the 1 day time frame, could work as your structural time frame. And finally, for your entry time frame as an intermediate trader, the 4 hours time frame or the 1 hour time frame can work well for you as your entry time frame as an intermediate trader. And finally, for our scalpers, those of us that just want in and out of the market, profit, sharp profit. Okay, what we're looking to do over here is that for our directional time frame, as scalp traders, the 1 day time frame can function well for our directional time frame. For our structural time frame, the 4 hours or the 1 hour time frame can function well for our structural time frame. And finally, for our entry time frame, as scalp traders, any of the minute time frame can work. It could be the 30 minutes, the 15 minutes, 5 minutes, 3 minutes, etc. Okay, so that's kind of like the guideline that you can use when performing multi-time frame analysis. So now let's pick one of the traders. Let's say let's go to be scalp traders now. Okay, and now as scalp traders, remember our directional time frame, we said the 1 day time frame can function well for our directional time frame. All right, the 1 day time frame can function well for as our directional time frame. All right, and how do we do this? That's the first question we ask ourselves. How do we find out the direction of the market? You do that by your knowledge of TA, your knowledge of trend lines, knowledge of support resistant lines, and some other indicators that are involved in TA. So if you're new to crypto and you would like more knowledge on technical analysis, or you would like to know better on trend lines or support resistant lines, basically how to perform technical analysis, how to be able to generate your own signals for yourself, you can enroll into the B Empire Masterclass. All right, the B Empire Masterclass, you can do that by either visiting our website at bempire.org, or you can send us a DM, or you could contact us through Telegram. All right, so okay, so we're going to find out the direction of the market, because now we're on our directional trend, we're on our directional time frame. So now we want to find out like the general trend of the market. And how do we do this? By simple TA. Now we can see over here that this coin is currently in an upward trend, as we can see here, like a mini upward trend on the 1 day time frame. And how do we know this? Here we're having higher lows, and higher lows. Okay, as you can see over here, higher lows and higher highs. Okay, so we see over here is the low for this particular trade, and we see the second low for this particular time frame is higher than the previous low. That's why we call it higher lows. Okay, and when we see that, is one clear indication of an upward trend. So to mark that, we're going to mark this with our trend line. So like I said, if you do not have sufficient knowledge on trend lines, or you want to learn more about trend lines, technical analysis, how to be an expert trader, even if you're a beginner, just reach out to us, and we can help you tackle that problem. Okay, so now we have our trend line drawn for our directional trend line. So now we can see over our, remember, we're scalp traders, that's why we're using the 1 day time frame as our directional time frame. So now we have been able to identify that this coin is currently in an upward trend. Okay, as we see over here, we see impulse rising from the time frame, and so on and so forth. Okay, now we have been able to identify the direction of the market. It means that now we should know that we should be taking upward trades, that's buy trades, long trades, etc. At least for now, since we are scalpers. Now we have been able to identify the direction of the market. We know we are going up, longing and buying the coin. Next, we move to our structural time frame to be able to kind of build a structure and know where our limits are for profit making and stop loss. Okay, now for our scalp traders, we could either use the 4 hour time frame or the 1 hour time frame as our guide for our structural time frame. So let's have our 1 hour time frame over here. Okay, we see this coin currently respecting this trend line. All price activity is above the trend line, that's signifying an upward trend. Okay, now what we want to do here and now is, I'm going to use a different color for the plotting for this one. What we want to do here now is, this is where we kind of build more structure. So let's say we have a major resistance level, as you can see here. Let me use purple, okay, for our structural time frame analysis, so that we don't get confused. So now over here we can see like kind of like a resistance level here that has been tested for quite some time, right? It has been tested for quite some time. As you can see, the coin respected this as a resistance level twice with having two price action, making it a good resistant level. Okay, now we could also you could do your plotting based on however you see fit. Okay, now we could also build a mini support and resistant level. We can see another one over here. Okay, now that's another major resistance support level. As we can see over here, it was tested twice. We see it being tested, sorry, we see it being tested at this point and at this point. You kind of see like we're trying to build structure around this trade, and you kind of have like a little one here too. Okay, I'll have one over here. Okay, and finally, let's just draw one more. Okay, a trend line for, like I said, if you need some more knowledge on, if you're not really familiar with your trend lines, you can just let us know and we can enroll you in the class, and then you know where we're not just placing these lines randomly. You know where to place these lines as your trend lines. Okay, good. So you can see I use like three different colors for our structural trend, for our different time frames. I use the orange for our directional time frame to kind of know the general trend of the market, and then I used the purple for our structural time frame to kind of give us like a better structure for the market. All right, now we can see over here, what do we see at this point? Now we see clearly this coin is in an upward trend. This is the upward trend for our structural time frame. Clearly this coin is in an upward trend. Okay, this coin is in an upward trend. Until it breaks this upward trend, it is still in an upward trend for our 1 hour time frame. So you see the structural time frame in direction and the directional time frame both agree that we're going to be going bullish. Now as for structure, we're looking for where to kind of like place our boundaries. That's the reason for the horizontal support and resistance lines which we drew over here. We're trying to look for where to place our boundaries. Okay, now we can see this coin currently at this resistant level. It's trying to break across this resistant level. Okay, trying to break above this resistant level. All right, and the reason for this is because it's in an upward trend line. It previously hit this upward trend line over here, and we see the coin moving upward. All right, now meaning that we should be taking an upward trade. But now the purpose for these lines are to show us different places where we can take profits. So I don't know if some of you have seen kind of like some trading signals. You see TP1, TP2, TP3. These are how you set your TP1, TP2, TP3. Like I said, we're aimed at helping you generate your own signals, trade on your own as an expert, even if you're still a beginner. All right, so this could be, assuming we enter this trade at this point on this trend line. Okay, this first line could be our what? Our TP1, our TP2 could be this line, and finally our TP3 could be this line. And we can set our stop loss probably down here, somewhere at this level, this support level over here. Okay, now I recommend setting your stop loss and take profit level in kind of like ratio 1 to 3. Okay, take profit as 3 and then your stop loss as 1. All right, the reason for this is because you want to make more profits than you want to lose. The reason for stop loss is to kind of like help you minimize your risk, just in case the market doesn't go in the direction that you expect it to go. Okay, so by 1:3, I mean you want to make 3 times more than you would like to lose. Okay, so for example, 1:3, kind of like you're ready to lose $10 in order to gain $30, something like that. So we could set our let me outline that for us, just kind of like a short thing. Good. See this long line I just did here? Good. Now we could set our stop loss for this trade on this line. This is a support line, kind of like a mini support line. Okay, we could set our stop loss at this point. Okay, and we could set our take profit one here. By stop loss, I mean if the coin, instead of rising, it falls. All right, you can, I'll even suggest bringing this down a little bit. Good. Now we could set our stop loss here. By stop loss, I mean if the trade doesn't go in your direction, instead of rising, it falls. If it falls to this level, the trade should end. Your trading app should cancel and opt you out of the trade immediately. Okay, and then you could enter the trade at this point because it's just leaving the trend line. Okay, enter the trade for a long trade or a buy trade at this point. You can take profit 1 here, take profit 2 here, and finally take profit 3 here. Okay, I don't recommend going higher because price action is far from this point, except you would like to do, longer trades. Remember, we're analyzing our scalp traders, so we have been able to kind of like build structure or where we can take profit and where we can take stop loss, meaning that we do not want our trade to go outside this circle, neither do we want our trade to go below this line. We're telling ourselves that if we enter this trade now, if this coin, instead of rising, falls to this level, opt out of the trade. Okay, so, and then take profit at any of these levels over here. So now we're done with our structural trend line, so our structural time frame. As scalp traders, we use the 1 hour time frame for that. Now let's go to a lower time frame. Now if you see, we're doing it in descending order. Let's go to a lower time frame, which is what? Our entry time frame. And as scalp traders, I said our entry time frame could be any of the minute time frame. It could be we could decide to use, let's say, the 15 minutes time frame as our minute time frame for our scalp trading. Okay, minute time frame for our scalp trading. Of course, you can also pair this with many other indicators like the MACD, so on and so forth, many other very nice indicators. Okay, just to confirm your analysis. All right, so now at the entry time frame, this is where we get an exact buy signal, or an exact buy trade. Okay, so if we look over here, this coin just recently broke out of a mini downward trend. As you can see over here, a mini downward trend, and it's currently is trying to form an upward trend. And how do we see this upward trend? We see this by, how do we identify upward trends? By higher lows. Okay, the previous low is lower than the coming low, and so on and so forth. It keeps increasing from there. So let's zoom in a little bit. This is the reason why I'm using different colors, okay, for this plotting, so that we do not get confused. So let's draw like a little trend line. Let's use blue. Yeah, let's use blue. Let's draw a trend line for this. Good. Now remember, we are in our entry time frame. We're trying to look for exact entry points. Okay, exact entry points. And this coin, the structural time frame for this, the structural time frame gave us this as resistance level and this as support level, we can still maintain this because this coin is actually even still maintaining it on the 15 minutes time frame, so we can still maintain those lines. No need to plot new horizontal support resistance lines. Now for the exact buying point, we would buy exactly when the price of this coin, we will long this coin or buy this coin exactly when the price of this coin hits this upward trend line. Okay, so that will be in a better position to enter the market when the coin is just about to rise. Okay, and then we can set our take profit over here or at this level, either at this level or at this level, because we see the coin still respects this line from the structural time frame as support resistance, kind of like in a way. Or you could go ahead to plot your own support resistance lines on the entry time frame. So we'll just wait for this coin, for the price of this coin. By the time you want to enter this trade, the moment on the entry time frame where this coin hits the upward trend line, we can go ahead to long this coin or buy this coin. Okay, and then take profit at any support, any resistance level above our buying price. All right, so that's kind of like, a little summary or a wrap on how multi-time frame analysis works. It would be discussed more in our crypto trading masterclass. Okay, if you're interested, just inform us, let us know, and we could sign you up immediately and you start trading. Doesn't matter if you're a beginner trader or not. Okay, like I said, everything will be in simple English. So that's it on multi-time frame analysis. I hope this video was helpful. If it was helpful to you, you can like the video, subscribe to our channel, because we're starting kind of like a weekly post, trying to meet up to like a weekly post on some tips or topics that are challenging to crypto traders. So let us know in the comment section what topic you would like us to treat next weekend, and also if you have any questions, just let us know in the comment section. Thank you for listening. Have a blessed weekend.